Good morning, good morning, everybody. How y'all doing? How y'all doing? How y'all doing? Running a little bit late today, of course, because I was sleeping. So we're gonna give it a minute for people to start pulling up. Man, let me send out a few alerts while we wait on people to come in. While we wait on people to come in. I should say alerts. Send out a few bat signals. Send out a few bat signals. How y'all doing this morning, man? How y'all doing this morning, man? I'm in slow motion. Y'all drop something in the chat so I can know who's here. So I can know who's here when I get started. All right. Let's man, my okay. I got caught up looking at stuff. All right, man. Good morning, everybody. How y'all doing? I ain't even got my official lighting set up. I ain't got my official lighting set up. I ain't got nothing going on. I'm struggling over here, man. Sorry, man. Sorry to struggle, man. Don't nobody be tapped in for real except gang. So y'all know how y'all already know how I do. Just dazed, you feel me? Y'all know how I do, man. Good morning, everybody. This first time tuned in to Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. Give you a nice hearty thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers, aka Aranya Grande, that big spot for those that know Hablo Espanol. And you are now in tune to another episode of The Overnight Price Action Review. Yep. Now, let's get to it, man. Let's see who in the chat. Good morning, here to learn and share. Good morning to you. The birds are chirping. They might be wet because it stormed yesterday. Yes, it did. What's up, Tish? How you doing? Buenos dias, Valentine. Buenos dias. What's up, Calio? What's going on, the Black Al Davis? Thank you for sharing your trading journey with us last night. You are welcome, the Black Al Davis. You are welcome. Let's get to it, man. Let's get to it. Let's get it started. Let's get it started in here. In here. Okay, let's find 6 o'clock p.m. Wednesday at 6 o'clock. What's up, E-Rock? What's going on? We miss you too, E-Rock. We miss you too. Look at me looking at E-Rock background. I ain't never looked at E-Rock background at her picture. Y'all know I be looking at backgrounds. Y'all know I be looking at backgrounds now. Looking at E-Rock background at her picture. My wife be talking to me, you always zooming in on somebody's picture. Don't take a picture around me and have messed up feet. Or something like that. I'm gonna zoom in on your picture. I'm zooming in, looking at shirts, looking at crazy looks. Look at, call me true. Homework reviews are not recorded. But I told you all to record your screens. So if someone recorded it, they might share it. But if you share it, make sure you share it in the same channel that we were in. That would be the PA Minty Voice channel. And the reason why is because it's a tiered system. And I don't want nobody who not paying the same thing that you're paying to get what you got. Cause sometimes people get mad at stuff like that. And I'm not that cat to do something like that. Oh my goodness. I kill me. Let's go and see what's going on with price. Oh, I hate when they overlap like that, man. I hate when they overlap like that, man. Put that on the top. Put that on the bottom. Hate when they overlap like that, man. Jumble up the words, man. I put that line on the raw chart. I put it on the AQ. Oh, man. I hope we don't get no everything and nothing day. I talked about that last night. I was like, man, we had a huge day. Hopefully we don't get an everything and nothing. And right now it's giving a little bit of nothing. But let's see if it wake up on the New York session and give us something. Let's see if we get us a delayed London protraction. Let's see if we get that. Price started moving around 130 during the delayed London protraction. You know how you have a relatively small range Asian session, and then price starts to, it doesn't move directly at midnight, and make the beeline, it starts moving a little bit later. See how I started moving around like after 1, and then form the low of the day during London, and then that's the London, that's the delayed London protraction. What's the name? But it's not, it ain't got like all the characteristics of it. It ain't got all the characteristics of it, but it's pretty, it's pretty much all the characteristics. But I don't know if we'll get that. But looking like everything and nothing day. Yeah, see right there. See everything and then nothing. All right, we've taken out the low already. You know what I'm saying? Looking like a everything and nothing day. We've taken out the low. All right. Didn't completely feel that imbalance. Came very close to it. Yes, came very close to it. 3 ticks away. Okay, 3 ticks away from that. Feeling that. Yeah. But yeah, see, everything and then a nothing. Everything and nothing. Right now, we have the opportunity of making a SIBI that big right now. If price does not come back above 54.90 even today, then we will have a SIBI that big, right? We will have a SIBI that big. It will be a 97 3/4 point bearish fair value gap, right? If price does not come back above 54.90 even, right? 54.90 even. So at this point, this SIBI is looking like it will create a SIBI. And that bodes well for the bearish case of continuing lower. It doesn't mean we're just going to keep melting off forever. I mean, we can, but it doesn't mean we will continue to melt off forever, right? And so, gang, because I put it, matter of fact, anybody, because I put it on Al Gore's internet for the free 99, right? Mentees, we just spoke about it last night. So if this SIBI does create a SIBI, right, and we've come below that area right there, what will we be looking for in price going forward, right? What will we be looking for in price going forward in relations to this area over here? What signs will we be, what signatures will we be looking for in this area over here, right? And what signatures will we be looking for from this SIBI right here, if it does create a SIBI. So what, put in the chat. That's one thing. That's one thing. AR cooling. That's one thing, right? Nope, Sanjay, we're not looking for that. That's one thing, AR cooling. But I can tell you have not been doing any homework or keeping up with any of the videos. we already in the sale model setup. We're already in the sale model setup. Right? What about the sale model setup will we be looking for? Put a 1 and tell me what we will be looking for over here. Right? Besides the breaker, right? Yes, that's true. The breaker, right? Right? That's the breaker, yes. But put a 1 and tell me what we are looking for over here, right? Besides the breaker, right? Because we don't want to say, hey, the breaker should hold price down. What we're going deeper than that, right? Besides the breaker, I'm not saying the breaker is wrong. That's cool. Breaker is good, but we're not just saying the breaker should hold price down. We want to think about it, about why is price doing what it's doing? What's the narrative of what price is doing? So 1, put a 1 and tell me what we are looking for over here, right? And then put a 2 and tell me what we're looking for that to do. Okay. So 1, what we look for over here. 2, what do we want that to do as price moves forward? If we do create a SIBI right there. All right. This why like matter of fact, I'm gonna put the link in the chat. Right? I'm gonna put the link in the chat. And anybody that wants to pull up can come join me on stage and verbally say what's going on. Right? Verbally say what's going on. The link is in the chat. Anybody that wants to talk, you don't have to be on camera. You don't have to turn your camera on. You can turn your camera on if you want to, but anybody that wants to verbally say what's going on. I know it's hard to be typing, trying to type stuff out. One, balance range and bearish order block. All right. Somebody said one balance range and bearish order block. 1 bearish order block retrace and retrace or reaccumulation. All right. Kim, the Blackout Davis. I just said it last night. We just talked about this last night. I'm calling names today. I'm calling people out. Ain't nobody getting everybody scared to get on stage. Is Tish in here? Tish, where you at? Pull up. I don't care if your grandbaby making noise, Tish. Pull up on the link and talk. Look, we just talked about it last night. Right? Let's do it by the numbers. Let's do it by the. I know y'all be like, Tim always be trying to make me use my brain. Just tell me, man. Just tell. Remember last night we was talking and y'all was like, man, it's clear as day when you say that. Right? You're in the office today when y'all be like, it's clear as day. It's clear as day when you say it. I can see it clear as day when you say it. Let's do it by the number. Who that is? Who that just pulled up in the chat? That's Tish.
It's me.
What's going on, Tish?
Nothing much. To be honest with you, I forgot the second part of going back to the fair value gap. But I know that when it goes back to this looks like consolidation, we wanted to go back to and hit the order block, that first one, the bearish order block. But it can go up to that top one.
Yes, right. So if it come back to that order block, that bearish order block right there, or that bearish order block right there. Well, wait a minute. Can y'all hear Tish talking, right? Somebody put a 1 in the chat if y'all can hear Tish talking. Like when she was just talking. She ain't talking right now. Y'all can't hear her talking. I had turned it up, so hopefully y'all can hear her talking. I probably should have mine open so I could, because it'd be like a delay. Yes, they put a 1 in the chat so they can hear you. Okay, so when price comes back up into this area, right? The first thing we're looking for, Tish said, we want to see it come over here to the either one of these bearish order. And why are we watching those bearish order blocks? What do we anticipate them to be?
Reclaimed order blocks.
Reclaimed order blocks, right? And the reason why we're looking for them to be reclaimed order blocks is because we have now determined with this move here, right? Hey, we on the sell side of the curve. So we draw our line down the middle, right? We say we on the sell side of the curve, right? These daily candles, if anybody who always be like, what time frame is that? It matters not. Price is fractal, right? So what do Tish? What, right? We come up here. Get it together, Tim. So when we came up here and we drop there, right? Now that we determine we on the sell side of the curve, what is this up here?
The smart money reversal.
The smart money reversal. What is this right here? Low risk short.
Low risk short.
The low risk short. Okay. All right. What is this right here when we trade past that low right there? What is that right there?
That's the offset.
Nuh-uh. It just don't think that deep, right? We came up here, we went down there, right? We went up, we came down. When we passed that low, what is that right there? When we passed that low there, this low took out a high. So when we passed that low, that is a not no PD array. When we passed that low, what is that? Right? Because this low took out a high. So when we trade past that low, what is that called when we pass that low?
I'm stuck.
Starts with a B.
Oh, you talking about the balance?
No, you think it too deep. When we trade, just when we trade past that low, what is it called?
And it's not a PD array, so if it's not,
it's a thing. It's just an action. It's not a PD array. No, see everybody talk about breaker. No, it's not a PD array. Everybody hollering breaker. When just the act of passing this low, that low, breaking market structure. There you go, right there. A breaking market structure. So now, because we came up, right, to this invisible anticipatory reactionary point, because we're in the stratosphere. We have nothing to see what we're targeting, right? So we have to wait for signatures to let us know what's going on. So the signatures that we got, once we get the low risk short and the break in market structure, by deductive reasoning, if that's the word I'm looking for, we determine that this is the smart money reversal, because we got a break in markets. I mean, a low risk, we got a break in market structure off of a low risk short, right? And it's a low risk short because the risk to reward, you're risking to this high to come down here somewhere, right? So it's a low risk short. And once you see the low risk short, the smart money reversal, the break in market structure under the last area of accumulation in this case, it's a break in market structure, right? I mean, we determine we're in a market maker sell model, right? We're on the sell side of the curve. Okay, now that we're on the sell side of the curve, right? Now that we're on the sell side of the curve, we are anticipating price to give us more signatures, right? And the signatures that we are looking for is that price adheres to what type of program, Tish? We want to see price adhere to what?
The
Sale program, right? We want to see that price adheres to a sale program, right? And what are some key signatures that price is in a sale program? What will the order flow gonna be bearish, but what will price do in a sale program? It will respect what?
It'll respect the highs.
Yes, it'll respect highs.
And
Okay, what else? What else? What else? It respect highs. What else would it respect? Right. So it'll respect highs, right? What else
it'll
will
go back those order blocks that was made on the other curve of the model?
We ain't got to that.
Okay.
We ain't got to that yet. But what, just in a sale program, what will it respect? It's going to respect the highs, right? What else will it respect?
It's going to respect the
somebody put one of them in the chat, right?
Oh, I'm not.
Yeah, no, that's fine. Go ahead. You said it's going to respect what? The bearish what?
PD arrays.
Bearish PD arrays. Yep. So we got us a order block there, a bearish order block there, right? What else will it respect? We got a bearish breaker over here. What else will it respect? Outside of just being PD arrays, something very simple. What will it respect? Right? Outside of PD arrays, it's very simple. In a sale program, it's going to respect like premium PD arrays, right? That's swing high, swing lows, and it's one other thing. It's there on the chart. They're red and green.
The bodies of the candles.
Which candles? Which candles? It's in a sale. It's on a sale program. So which candles is it going to respect?
The
up close candles. There you go. So in a sale program, it's gonna respect up close candles and bearish PD arrays, meaning the PD arrays that's above the price. Premium PD arrays, bearish PD arrays, but you know what I'm saying? Premium meaning above price, bearish PD arrays meaning above price. Okay, it can be an inversion fair value gap, inversion bullish fair value gap, because that's a bearish PD array because it's inverted. Now, so we got the market come down, right? And we had us a breaking market structure there because that low came up and took out that high, right? Bearish breaking market structure there. Price traded back up into this SIBI, right? Into this bearish order block, right? And respected it. Then this SIBI is looking like it may create a SIBI, right? So moving forward, I'm not talking to you. Moving forward, what do we want to see this SIBI do?
Okay.
The same thing that we saw this one do. What do we
we
want
want
to we
create more cities.
yes. So moving forward, we want to see, for the bearish case, we want to see this SIBI create more daily SIBIs. Okay. Now, what do we want to see price do if it starts to start to trade back up, coming over here? And like Tish said, we want to see price start to reclaim bearish order blocks, right? So we look inside this area of accumulation, because when the smart money, right, was in this area right here, they were accumulating longs and shorts, right? They were accumulating longs and shorts. The longs they were accumulating was to manipulate price up to a very specific point, right? And the shorts they was accumulating is because they want to go short. Okay. So when price, the longs have done its job, the shorts that's over here, right, are now underwater up there, right? But they want to go short, but they have to hedge because they can't just get into price like us. Okay. And so, like Tish said, when it comes back up in this area, we want to see price reclaim bearish order blocks, right? What, Tim, which one do they reclaim? We don't know. That's why we just identify the bearish order blocks, and then we wait to see how. Let me move this other stuff out the way. Then we wait for signatures as price trades back up into the bearish order blocks. Why? Because at this price here and at this price here, which is the opening price of those bearish order blocks, IPTA is going to kick in and start selling at that price at 55.33. And if it gets up to 55.48, it's going to kick in and start selling. And if the narrative is still in play, right, IPTA will kick in. Will continue to sell until price comes back down to a predetermined destination, right? The liquidity pool below whatever the initial consolidation is. It will continue to do this over and over and over and over on the sell side of the curve until it reaches the predetermined liquidity pool, right? Tim, which one is it? Right? You just look for areas of initial consolidation, right? In this case, I would be looking at this area and that as the liquidity pool. Why? Because we had a consolidation, right? We took off, we had a retrace back to the consolidation, right? And then we had an area of accumulation. We had another area of accumulation. We had a smart money reversal. We had a low risk short. We broke below the last area of accumulation. So now we would look for it to reclaim order blocks, push down below that area of accumulation, push back up and reclaim the order block, right? And then push down below this area. And since this is a large liquidity pool, we would be waiting to see if price wants to reverse or if price wants to come and get our target that we pointed out. Right now, moving back in case I forgot anything. Oh, and as price comes up into this area here, right? If it's exceedingly bearish, this is the area we want to see it stop at. We don't want to see it dig too far, right? We don't want to see it dig too far up here because that high has a job. as Tish said, that high job is to keep price down, because in a sell program, it's going to respect highs, right? That high has a job to keep price down, right? And if you look over here, right, when we came down here, right, when we came down here, we pushed back up here into the wick of this bearish order block right there, right? That's very bearish. If you look there where I put my line, right, where I put my line, that is right in line with the consequent encroachment, right? If I put the line there, right, see that high went right in line with the consequent encroachment of the wick of this bearish order block, right? So that's exceedingly bearish, right? It didn't even get to the body. And why? Because the low of this order block is overlapping with that SIBI. So you want to see the sensitivity in from the wick to the opening price. And you see extreme sensitivity of the wick. It just gets to consequent encroachment of the wick of that order block and drops. That's exceedingly bearish, right? And another thing, this move up here and drop, how do you know that it's reacting off of the wick of this bearish order block right here? Because this candle right here, right? Oh, this good. Somebody charge you $19.95 for this on the internet. This candle right here, right? Why are we saying, Titch, why are we saying this push up into this area, right? Why are we saying it's coming back to the order block and we not saying it's just digging higher into that fair value gap? Why are we saying that? You still with me, Tish?
I am.
Yes. So it has something to do with this candle right here, right? When we pushed up here, right? What did this candle do? It starts with an M. What did this candle do, right? In relations to that SIBI right there. It starts with an M, right?
I'm not sure. I manipulated. I don't.
It close. It start with an M. It ain't manipulated. There you go. There you go. Here, learn to share, help you out. Mitigated.
Mitigated.
Okay. Yes. So this candle mitigated that SIBI. And Tish, what does it mean when we say it's unmitigated or mitigated?
It's mitigated when it touches it. It can just
barely.
It can just touch it.
Yes.
It's mitigated.
Yes. So once a candle touches that fair value gap, it's been mitigated, right? So if price starts to trade back up towards this fair value gap again, you start looking left to see what over here that price can be going back to, right? And when you start looking left, you see there's a bearish order block whose wick. Let me get some of this stuff off the screen. Y'all probably can't see nothing. All right. Okay. So we see here in this SIBI right here, right? This SIBI, okay. This candle right here mitigated the SIBI, traded into it. So when this candle starts to dig up, right, we not even focusing on that fair value gap anymore because it's been mitigated. We are looking to the left, to the left, to the left. Everything you need to know is always to the left, right? And when we look to the left, we notice that there is a bearish order block whose wick is overlapping, right? We're going to change the color of this. We're going to put it orange for order block. right? There's a bearish order block whose wick is overlapping with this SIBI. So when wicks are dangling inside, poking or dangling inside a fair value gap, that is a target. Excuse me, that's scrumptious to IPTA. IPTA likes that. IPTA like it, right? So you're looking for the sensitivity to be from the low of the wick in this case to the open. If it was a bearish candle, it'd be from the high of the wick to the open. Okay. So when price trades back up above this candle here, we're not focusing on the fair value gap. We're looking to the left. Oh, there's a bearish order block there. We get a heavy rejection off of that order block, right? And nothing's is by accident, because you see we come up right to consequent encroachment up. Matter of fact, let's check the price and see how close to consequent encroachment we came, right? So it went up to there, and consequent encroachment there is 56.30 even, and price came up to 56.2975, one tick below consequent encroachment of this wick, right? One tick below consequent encroachment of that wick on that bearish order block, and then rejected away. Okay, why can't I delete that? All right, so exceedingly bearish in that case. All right, now that's letting you know the sell program is intact, right? Why is that? Because when we came up here and broke down, we created a SIBI that we created one SIBI, two SIBIs, and we never got here. So this right here, what kind of gap is that, Tish? This is a what? What kind of gap is that? Starts with a B. Stacks on stacks on stacks on stacks. If you at work and you're getting tired, you need to take a what?
Take a break.
Yes. So what kind of gap is that? Break.
It's the breaker.
No, break. What type of gap?
A gap.
Stacks on stacks on stacks on stacks. Somebody help Tish out. Breakaway.
Oh, the breakaway gap.
There you go. Win the day. The breakaway gap. There you go. So we got we got a breakaway gap, right? And then we trade back up, so we don't even make it back to the breakaway gap, right? We're respecting the next SIBI, right? We're respecting the fair value gap. Okay. Oh, this fun to get good. This fun to get good. Remember when I always say every imbalance is not a fair value gap, right? Y'all know how I say that, right? So looking at this, we have an imbalance right there that we got circled, right? We got an imbalance right there. Okay. I need to get rid of this for a second. Right. There you go. Okay. So we got an imbalance here. We got an imbalance there. Okay. Now, why? I'm gonna really make your head hurt now, Tish. Why is that? Why am I saying this is an imbalance, right? And I'm saying this is a fair value gap. What about price is telling me that this should be a breakaway gap, right? Just an imbalance. This should be a breakaway gap, and this should be a fair value gap. What about price over here is saying this is a fair value gap and this is a breakaway gap, or just an imbalance in price? What makes this the fair value gap? Pick. It's several things, but anything about price over here, just anything about price over, because you don't have to know them all, but what about price over there is saying this is the fair value gap and this is a breakaway gap. This is just an imbalance in price.
Just a guess.
Okay.
I'm guessing because that area is balanced.
There you go.
It doesn't want to go back up there.
There you go.
Yeah, okay.
Balanced price range. And what else? Keep going.
So we don't want to see it go back up there. So we choose the second one as a fair value gap because it's not balanced, so it goes up to continue down.
Okay. And what I ain't gonna say always, but remember when I said I was watching a video and I was like, that's the perfect way to say that, right? So we're calling this the fair value gap because price seeks out, what does price always seek? It seeks
balance and liquidity.
Yes, balance and liquidity. And it's looking for balance because there's a what in price, right? Not imbalance, but what's
inefficiency.
Inefficiency, right? So this area is
okay.
This area is inefficient in what? What is this area inefficient in?
In buy side.
In buy side delivery, right? Up here, we got buy side, sell side, buy side, sell side. So this is a balanced price range because what? Because price did what?
It efficiently.
No. Buy side, sell side, and then
it moved away from
left it. And once price leave it, and we see that it's efficiently delivered on the buy side and the sell side, that makes this a balanced price range when price leaves it, right? So since it's efficiently delivered there, right? And it's lacking buy side delivery here, right? That's an imbalance. That's an inefficiency. Since it's inefficiently delivered, that becomes a target to be a fair value gap because this, we anticipate price to come back there and give buyers a fair chance of participating in the market. There's your fair value gap because there's your inefficiency, right? And in a sell program, that high is to be protected by this order block, right? By this SIBI. And since price is seeking balance and inefficiencies, liquidity and inefficiencies, the liquidity is here, right? This liquidity is to be protected. We're going to put a P up there, right? That liquidity is to be protected, right? So if this liquidity is to be protected because we're on the sell side of the curve, where is the inefficiency? So when price starts to trade back up, this is efficiently delivered. This is lacking buy side delivery. So we want to see price come into that area to offer buy side delivery, right? And then we look to the left and we see that we have a order block whose wick is overlapping with the fair value gap, the inefficiency, right? And so we want to see sensitivity at that wick. We don't want to see it dig back up into this balanced price range to come back to that inefficiency because this area has been efficiently delivered, right? And if price starts to get up there, it's showing weakness in the sell program. Not saying that it won't, but it's showing, you like, oh, the sell program weak. You know what I'm saying? It ain't real strong. It might be coming to an end, right? But we don't want to see that at the peak of the sell program, right? So it trades back to the inefficiency and then it drop it like it's hard, right? And give us another break-in market structure, right? This break-in market structure here was on the daily, that told us we were on the sale side of the curve for the daily had let's go. This good. When we came up here, right? Now let's look at the signatures that we missed, right? Let's look at the signatures that we not missed. Let's look at the signatures that we were getting the whole time through. And we just didn't act on them because they were just signatures and we needed more confirmation, right? When this low came up and took out this high, and this candle here closed above that high, and the very next candle did this, right? What did this candle do to that candle right there? What did that candle do to this candle right here? Tish, we're going to walk through it by the numbers.
It engulfed it.
It engulfed it, right? So this candle, right? This last up close candle was the candle that when it took out the swing high, it closed above the high. And then the very next candle engulfed the body of, and we talk about the wick, but in this case, it did engulf the wick, but it engulfed the body of that candle, meaning closed below the opening price of that candle. What is 56.8875 now? What is that price? All right. What do we call, what is that? That is a type of what? That price right there is a price that IPTA will be looking for as a what? It starts with a C.
The change in state of delivery.
Change in state of delivery, right? That's our first signature that the market has shifted from bullish to bearish. That's our first signature, our first change in the state of delivery, right? Now, when we came down here and we got this breaking market structure, right? What is that? That's another type of what?
It's another change in state of delivery.
Another type of a change in the state of delivery. These are all things you can look at as a change in the state of delivery, depending on how you trade, right? Depending on how you trade. When we look over here, we see that we have a bullish fair value gap. And on this candle right here, oh, nope, I'm sorry. On this candle right there, we closed below that bullish fair value gap. What is that?
It's an inversion fair value gap, which is another change in state of delivery.
Another type of change in the state of delivery, right? So all of these signatures, they're just stacks on stacks on stacks on stacks, blocks on blocks on blocks on blocks, right? It's showing you that price. These are all different. These are different confirmation points depending on how you trade. These are different confirmation points that's saying price has shifted from bullish to bearish. If, like, remember when I said the other night on the live, I said, if you're aggressive, right? If you're aggressive, you can say this was the smart money reversal. This, we're now on the sell side of the model, right? I said, I don't trade that. I don't even trade the low risk short. I wait until after the low risk short happens, because at that time, it was on a Monday. We were here. For those who did not pop up, I'm talking about when we were on, when I said I'm doing free one-on-ones. Go back and look at the video if you think I'm just making this up right now. But the gang know what time it is. Price was here. I said, if you're aggressive, you can say this is the smart money reversal, because we had already got the change in the state of delivery. We got the break in market structure, another type of change in the state of delivery. We got the inversion fair value gap, another type of change in the state of delivery. And then we had come down and was reacting off of this area here. That area there is our last stage of accumulation going up, right? So with the, when you get to your, when you're coming down and you get to your last stage of accumulation coming up, then you look up here and you see this balanced price range there. What will price do is two things that price can do with a balanced price range, Tish. What are they? If we're below a balanced price range, we want to see it act as what?
Resistance.
We want to see it act as resistance, right? And since we're in a sale program, what do we want to price to do when it comes back to this balanced price range after going up and setting up the low risk short? What do we want to see price do to that balanced price range?
We want to see go through it.
How do we say it? We're gonna cut through it.
Go ahead.
Go ahead. No, you say it.
We're gonna cut through it like butter.
Cut through it like butter. We want to see it cut through it like butter, right? So when price went back up to that area, right, we got one change in state of delivery, right? We got another type of change in state of delivery at the break in market structure, right? We got another type of change in state of delivery at the inversion fair value gap. You pick your poison, whichever one you want to be your official sign of change in the state of delivery, right? In this case, we just happen to have an order block, a break in market structure, and an inversion fair value gap. We got three. And you're not going to always have three, but we have three here. A lot of clues, right? And then when price touches the last area of accumulation on the buy side of the model and pushes back up into the inefficiency, right? This is the inefficiency because that's efficiently delivered is lacking buy side buy side delivery. When it trades back up into the inefficiency and touches the bearish order block, price cuts through it like butter. Oh, this good. Oh, this good. Is somebody charge you $19.95 on internet for this? Shout out Wall Street Trapper. Wall Street Trapper say it's somebody on the internet charge you $19.95 for this right now. Is somebody charging y'all $19.95 for this right now, man? $19.95 for this. And I think that's it, Tish. Tish, you okay, Tish?
I am.
Okay. I just want to make sure you're okay now.
Good.
I want to make sure you're okay. I'm gonna make you use your brain now. Okay,
right.
we trying to set up that grandbaby trust fund.
I know that's right.
Hey, man. I'm tired of talking.
Good, yeah.
I'm tired of talking. I appreciate you, Tish, for coming up on. Y'all give Tish a round of applause. All right, Tish. Mute yourself. Get out of here. Go on somewhere. Now, hey, y'all give Tish a round of applause, man. I appreciate Tish for pulling up. Tish, she ain't scared to pull up and go through my grueling. See, because I want you to use your brain. I don't want you just to listen to me when you force yourself to put them stacks on stacks on stacks on stacks, blocks on blocks on blocks on blocks. You're going to remember this stuff. You're going to remember this stuff. And I want you to understand how to read the price action so that you can decide what is my PDub rate of choice for entries. What now that I know where price is going, and here's the gag. Everything that we looked at on this daily time frame, right? When you're watching for it on the daily, you just watch for it on the 4 hour, watch for it on the 1 hour, watch for it on the 15 minute, watch for it on the 5 minute, watch for it on the 1 minute. And whatever your entry time frame is, if you enter on a 4 hour, if you enter on a 1 hour, if you enter on a 15 minute, if you enter on a 5 minute, if you enter on a 1 minute, if you enter on a 30-second, whatever time frame you enter on, when your entry time frame aligns with your higher time frame, and it does this, you know what I'm saying? If when you're here and you're looking for a price to come back, just say you trade order blocks and you're looking for a price to come back to your order block, right? Let's put some meat on the bone, right? Put some meat on the bone. Okay. These are daily candles, right? If you trade on a 1 hour, 15 minute, 5 minute, 1 minute, we're going to say, so y'all put in the chat what time frame you say I'm going to be making my entries on this time frame. Y'all put it in the chat and we're going to pick one, right? We're going to pick one. Put in the chat what time frame you trade on. You want to be making your entries on. Right? Put it in the chat. I give you a couple seconds while I sip some high quality H2O. BDB Walker. What's up, BDB? BDB Walker. What's up? We're going to go in 5 minutes. I see overwhelming 5 minutes. Black Al Davis. 1 minute, exact same thing. 1 hour, exact same thing. 15 minutes, exact same thing that we're going to look at right here. Right? So, this is a daily candle. Right? We're going to put a line right there. Why? Because this is the day well, when you put a line on TradingView, it puts it at the start of that candle, right? So this is the day that the daily traded up into the order block, the daily order block, and we're anticipating it to act as an area to be able to sell in, right? So when this day starts to trade up into it, now you're watching your entry time frame, looking for an opportunity to get short. Okay. And remember, if it's not during your time that you trade, you suck it up and wait for your next opportunity, because just because you missed it here, there may be opportunities somewhere else because it still hasn't reached the destination, right? Until it reaches your destination, you keep looking for opportunities to do whatever side of the market maker model you're on, right? We're on the sell side. So you're looking for opportunities to sell, right? Okay. Now, 5 minute time frame, right? Let's find our line. There's our line. Okay. 5 minute time frame. This is the start of that day right there, right? And we're just looking, we're going straight from 5 minute to day, from daily to 5 minute. That's a huge jump. It's other time frames in there where you will have PD arrays in there to help guide you through this. Mind you, now this is a daily PD array, but there are other time frames that you're going to have PD arrays in there to support your thesis. Okay, so y'all remember everything that we did on the daily time frame when Tish was on here holding us down. Okay, so looking at this is the start of the day at 6 o'clock right there, right? Looking at the 5 minute chart, right? Looking at the 5 minute chart. Okay, what does this look like? Y'all remember when I said we have a initial consolidation, a retrace back to that consolidation, right? Retrace back to the consolidation, and then we go up, right? We go up there. Now we're in the daily PDub rate that we're anticipating price to reverse, right? Y'all remember that, right? So when we go up here, now this one here, it's not as sexy because the very next candle didn't close below the last candle that closed above the high, right? It's not as sexy, right? So it didn't close below that, right? But that's the last candle that closed above there. So it's not sexy. I don't like it when it take a long time like that. It's not clear. It's not super. Let me make this bigger. I'm sorry. Right. So we got our we over here. We got our come on. Got our retrace back to the initial consolidation, right? Then we move up, come down, move up. Now we're inside that area right there. We go inside the area there, right? Let's go back to there. We hit the area, right? We pull back down, right? We're respecting the low, right? We're respecting the low below this right here because we take back off again and push through the high. Okay, the buy program is still going on. All right, so we get here. Okay, we don't have a strong change in the state delivery because the very next candle doesn't come down and close below the opening of that, right? It wicks down past the opening. So in essence, it's traded below that price. So there's a change in the state delivery right there, right? But it ain't strong. I like to see when the next candle just engulfs it, right? And closes below the opening price. Not a strong one. Okay. Price starts to move back down, right? Starts to move back down. And then this candle right here gives us an inversion fair value gap right there. That is a strong change in state delivery. It's an inversion fair value gap, right? So on the 5-minute, we don't have a strong order block change in the state delivery. It's there, but it's not glaringly obvious, right? It's not glaringly obvious, but it's there. Now we got us an inversion fair value gap right there. Strong change in the state of delivery. Okay, strong change in the state of delivery. Price comes down here, right? And then we come down and we take out that low, right? That's a break in market structure because this low took out that high, right? That low took out that high, right? So we got us a break in market structure, another type of change in the state of delivery. Okay, another type of change in the state of delivery. We have here at this point, let's move the candle back some. Nope. Let's move the candle back some here. Gonna come right there. All right, because we want you to be able to see it. At this point, we have a unmitigated bearish fair value gap. Right there. We got an unmitigated bearish fair value gap right there. Okay. When we come up here, right? When we come up here, we've offered buy side delivery, sell side delivery, and we left that area, right? So we're looking at that as a balanced price range, right? Balanced price range. Buy side delivery, sell side delivery, left the area. Balanced price range, right? Right. We got an inversion fair value gap, change in state of delivery, right? Unmitigated fair value gap, break in market structure, change in state of delivery, break in market structure. We're now on the sell side of the curve. Initial consolidation, right? We're now on the sell side of the curve. Okay, so now your target is there, right? That's your initial target for the 5-minute time frame. Okay, so now that your eyes are there, now you're looking for your entry possibility. In this case, that's your balanced price range. That's your change in state delivery, right? Right here, we got our break in market structure, but we're trading, right? Right now, price is still trading above the breaker, right? Because this right here gave us our break in market structure, which created that breaker. But right now, we're still trading above the breaker, right? So we can't look at that as a possibility, right? But so we look to the left. We have another breaker right there. So we have us a bearish breaker right here, right? We got a bearish breaker right there, not extended, so that is not, right? We got a bearish breaker right here. We have, what else we got? We got another inversion fair value gap right here, right? Because this inversion fair value gap is up here at the balanced price range. That's too long in the tooth. We don't, what do we say? When we come back up, we don't want to see it digging deep. We want it to be exceedingly bearish, right? We got an inversion fair value gap, right? That inversion fair value gap is right there, right? Where's that inversion fair value gap? That inversion fair value gap is inside the inefficiency, right? We just go, this arrow right here is pointing to the inefficiency. That inversion fair value gap, that bearish breaker, that SIBI, it's all inside the inefficiency, right? What is it inefficient? We had sell side delivery coming out of this balanced price range. This is the buy, this lacking buy side delivery. So it's inefficiently delivered in buy side over there, right? So now as we zoom in and look here, right? As we zoom in and look here, we can see over here, we had all this buy side, sell side delivery over there, right? We had this buy side delivery. We came up here and we left this area, got our balanced price range. So we don't want to see it digging all the way up there because price has done a lot, right? Right, price has done a lot. So we're looking for it to be exceedingly bearish when it comes back up into this area right here. Now let's put our meat back on the bone. Right. Put our meat back on the bone so that we can get, there you go. Okay. Now let's look at it from, get all these brushes out of the way. Let's look at it from time, right? Look at it from time because we're talking about trading. So we're going to find, where did my line go? Did I take my line off? No, I didn't take my line off. Where's my line? Oh, it's back there. Okay. All right, there's my line. All right, so right here is 9:30. Put New York open on Tuesday. All right. So that's New York open right there. New York open price right there. Okay. So New York open price, we push up, we push up. We already said all this right here. This is what we've created right off of there. So now this is at 11. This is at 12. Okay. So here we go. Now this is afternoon. All right. So 1:30. Right. New York PM. New York PM on Tuesday. All right. So now here we go. We come back in the afternoon right here. Price has done all of this. Okay. So now it pushes back up where? Into the inefficiency. This is our inefficiency area right here. Right. What makes that our inefficiency area? Because this is our balanced price range. Right. This is our SIBI that came from this balanced price range, right? So price is inefficiently delivered in this area right here. Okay. This area is a balanced price range. See, we got consolidation there. We got consolidation here, right? So all of this, right, is a balanced price range, right? But we just focusing on that one there. Okay. When we come into our inefficiency, we want to see price remain heavy, right? So, and here, there's opportunity for small moves there. I ain't gonna say small moves. There's opportunity for moves here, right? But price don't always, give it to us during the time that we want. Because if you look here, we see that by the time this day is done right there, right? This right here is the last candle of the day, right? This the last candle of the day right there. So in this day, right, there was opportunity to take a short off of a bearish breaker, a SIBI, a inversion fair value gap, right? There's opportunity. I'm gonna move it over here, right? Move it. I'm gonna move it to where the opportunity presented itself. Right here. Right there. So, and then the breaker would be right there. And then the SIBI would be right there. Okay, so in the sense of trading here, we come here, we got our breaking market structure right there. Right. So any type of way we said this wasn't clear. So we're not gonna count this order block as an opportunity. Right. So the inversion fair value gap, right? There's our change of state delivery there. If you use that, right? Our break-in market structure, right? Our change in state delivery, if you use that, right? So we got the inversion fair value gap. We got the break-in market structure. In this case, we got two types of change in state delivery: inversion fair value gap, break-in market structure. Like I said, the order block after closed above is there, but it's not clear. So we're not counting that one. Okay. We only look for clear signatures. Now that we got our, whichever one is your clear signature, right? So if you use the inversion fair value gap, you got that on the 1220 candle, right? You got your change in the state of delivery signature on the 1220 candle. If you use the break-in market structure, you got that on the 1255 candle. So now you're on high alert, looking at your areas of wanting to enter. If you enter in on breakers, right? If you enter in on breakers, right? So we're looking for the breaker, right? We're looking for this breaker over here because we're still trading inside this breaker. See, when we got our breaking market structure, see, price is still trading inside this. We haven't left that breaker yet. We haven't left that breaker yet. Okay. So we push back up on the 150 candle, right? If you trade the breakers, you got picked up on the 150 candle, right? Better yet, let's do this. All right. If you trade breakers, you got picked up on the 150 candle right there. Okay. If you trade SIBIs, that ain't working. That ain't working. If you trade breakers, you got picked up on the 150 candle. Breakers. If you trade fair value gaps, you got picked up on the 155 candle. If you trade inversion fair value gaps, if you trade inversion fair value gaps, you got picked up on the 2 p.m. candle. What else we got over here? We said breakers, inversion fair value gaps, fair value gaps. There you go. So you got picked up. All of them you got picked up on. Everybody that trades any of these concepts, you got picked up on it, right? And then you had the opportunity to come down below that sell side right there. Everybody hit the low-hanging fruit before the end of day, right? Everybody hit the low-hanging fruit before the end of day, right? Matter of fact, everybody hit the low-hanging fruit on the same candle right there at 340, right? The same candle there at 340. Now, let's look at a little bit deeper because stuff don't always happen during our trading window, right? That stuff don't always happen during our trading window. So if you notice here, right, we offered all of this buy side, sell side, buy side, sell side, and then we left that area, right? We left that area. So since we left that area, we're looking at all of this as a balanced price range now, right? As we zoom out, looking at price, we're looking at all of that as a balanced price range now. Okay. So once we left that area, let's zoom in right here. Right. We got us a SIBI right there. Right. We got us a bearish order block right there. Right. Price left. We left that area, came down. Price traded back up into that area, into the SIBI, into the bearish order block, rejected off of it, right? Why? Because that is the inefficiency, right? We got balanced price range over here. We left that area. We got an inefficiency there. Price trades back up into the inefficiency. And then when we wake up the next day, right? When we wake up the next day, Where's my chart? Oh, I got an arrow. I'm tripping. When we wake up the next day, right, which is, where's my, what is going on? What in the world is going on with my chart? Oh, I can't see it. That's what's going on. When we wake up the next day off of, I couldn't see it. It couldn't see it. So when we wake up the next day from this, look at the reaction we got, right? You can, when you have a gap down like that, right? When you have a gap down like that and we never come back to it, just for the time being, right? You could just envision, right? You could just envision for the time being a huge, in this case, down closed candle right there. You could just envision a huge down closed candle right there, because prices is pretty much telling you, if I didn't run into your man-made close time, this is what I was going to keep doing. I was just going to keep selling down right here. But like I say, it don't always happen during our time. But what did it do? Right? It had taken the sell side, right? Left an inefficiency after leaving this balanced price range, left an inefficiency, traded back up into that inefficiency, right? On the 4 p.m. candle. This is after the New York close, right? Traded down, pushed back up, right? This up close candle right here, right? That up close candle right there. We're respecting that up close candle, stopped, and then sold off. And then for the rest of the day, y'all see what went on. And you can go in and look for the signatures yourself to see if it's still doing the same thing. Oh my God. Oh my goodness. Oh my goodness. I don't know. I don't know. I don't know what else to say. I don't know what else to say. It ain't nobody on Al Gore's internet just giving this right here away for free. I'm tripping, man. I'm tripping, man. It's a lot of great people on the internet sharing these ICT concepts, man. It's a lot of great people on the internet sharing these ICT concepts. It's a lot of negative. It's a negative stigma to it, if you will, in the trading community. For some reason, people just got like this weird hate for the ICT concepts and the people that trade them. Probably because a lot of the people that trade them are jerks on Al Gore's internet. But around here in the gang, we are very respectful individuals, and we treat everybody with dignity and care. And B to B. B to B. Hey, I keep saying that because we call my niece B to B. We call my niece B. Y'all know it. Y'all know where B to B come from? Well, I ain't gonna say come from, but y'all know who was like a famous character that was called B to B. B to B. Hey man, that's all I got, man. I appreciate y'all for hanging out with me. Hopefully I was able to say something on this live stream that helped somebody out. If I wasn't, I promise you, I will do my best next time to share something that's going to help you along your trading journey. Hey, man. Until the next time I decide to get on Al Gore's. Wait a minute. Let me get my stuff. Let me get myself together. Till the next time I decide to get on Al Gore's internet and share my thoughts on this thing they call price action. It's your boy, Timothy Lee Rogers Sr., aka Aranya Grande. That's Big Spot if you don't hablo Espanol. Man, y'all be safe out here in these trading streets. I'm gone. Yeah.